When it comes to trading financial markets, especially in the Forex market, I would venture to say that most people who become interested in trading and then try to learn how to trade and start practicing and learning every day over a period of time, that most of these people experience some difficulty and frustration. In fact, I would say probably everyone who has ever tried to learn how to trade has experienced some challenge, difficulty, and frustration. So first of all, if you've ever experienced that, just know that that's normal, and that is really a process of learning any skill. But trading can be especially frustrating, especially when there's money on the line and there are all these emotions involved. So when a trader begins to become interested in this business and starts looking at the different approaches to trading and learning a little bit about technical analysis and learning some different trading strategies, there's no doubt that they're going to experience from time to time that it just doesn't work like you expected it to work. Well, when I first got started in trading, I looked at some of the trading strategies that were being taught to me, and I immediately began to have a series of insights on how some of these methods were deficient, or perhaps there was some obvious way that you could improve the process that many traders are using. And so you may have heard the expression, buy at the bottom, sell at the top. And that's pretty obvious, good advice, but how do you know when the market is at the bottom or at the top? Well, what I've discovered over the last several years is that there is a way to determine with a high degree of accuracy when there is a turning point that represents a point in time to enter a trade or to exit a trade. And in general, the rhythm of profit is contrary to the normal approach to trading. What people normally do doesn't work. So here's the first thing that you might want to notice as you look at charts and you begin to look at currency pairs and you look at all different time frames, and I'm sure you've already learned many different aspects of technical analysis and you may have years of experience in trading. But look again and see if it's not true that on almost all currency pairs, on all time frames, markets are forming trends followed by corrections. If you know how to determine the end of a trend and the end of a correction, or in other words, the beginning of a correction and the beginning of a trend, you can enter trades in rhythm with the cycle that will produce profit. So first of all, just take a currency pair and look at it, look at any time frame, and if you look at the Aussie versus the dollar at this time, which is this is on November the 20th, 2010, there is a very strong, perhaps overextended uptrend, and a trend has a certain shape to it, and it tends to be at a fairly steep angle in the waves that are going up, and you might just notice that depending on what time frame you're looking at, the waves of a trend will have mostly bullish candles, and it has a certain shape. You get used to it. Each one is organic and different and unique, like a snowflake. Every trend is a little bit different, and the number of waves in the trend is almost completely irrelevant. But what is important is the fact that the market does form trends. And then there are corrections, these sections right here, where the price is really going up over this entire time, starting at June 9th, 2010. And it's really been going up all that time, but there are periods when it's going down, and these areas are corrective waves in a trend. And if you go to a shorter time frame, each one of these waves going up is a trend of its own, and the waves that are going down are corrections to a trend. Now just take any currency pair and look at any time frame, and you're going to see this. Somewhere you're going to see movement in one direction that forms trend-like action, and a reversal of the market may often be that there is a turning point on a longer time frame. Now let's look at the euro versus the dollar, because this one has some really clear and distinct patterns that are so clear that they are almost perfect. Well, the point is Whenever you see really strong movement that a currency pair or any financial equity has been moving strong in one direction, at that point you want to be looking for an exit to a trade. And that's when most traders are actually looking to enter a trade, is after it has moved. Then people get excited about it. After it has moved. And that's when you want to exit the trade. If you see a trend on your charts, and I've even seen some of the top trading gurus teaching people that in a strong trending market, that's when trading is good. Well, when you see a strong trend on your charts, you want to be looking for an exit if you intend to be in the rhythm of profit. So when you are looking to enter, it's back here when the market is actually going down. You saw a previous trend and the market is going down, that's when you're actually looking to enter and go long. Well, that's a little bit different from what most traders are doing, but traders who actually intend to be in the rhythm of profit are doing this. If the market has been trending and then it's correcting and going down, that's when we're looking to enter the trade. And then at the end of the correction, that's when we enter. So at this point in time, people are not excited about being long, but that's when you want to enter. And then after you enter, you want to be experiencing what we call the effortless flow of abundance. That's when you're just letting the profit flow because you're looking for an exit and you know how to determine the end of a trend. You're not going to exit until you get to the end of a trend, which is another huge challenge and misconception that almost all traders in the world have, is that people tend to believe that if you're in a trade, you should just grab the profit while you can, or take off half your position at a certain price target or something like that, because you just never know. And the belief is that you can't tell when there's the end of a trend. And if you do know how to determine the end of a trend, you see that there's a certain phenomenon, it happens every single time, then you know that you can just stay in the trade, and you stay in until the end of the trend. And if you enter at the beginning of a trend, and if you exit at the end of a trend, you're getting about the best possible results that you can get in trading. And you're doing something that may be kind of the opposite of what most people are doing. So the key is if you can determine the end of a trend and the end of a correction. Now the end of a trend is the beginning of a correction, and the end of a correction is the beginning of a trend. Once you see how to do this, you are going to be so excited that you're going to start creating a vision for your life that you never dreamed of before. Because when you see that you can enter a trade right at the beginning of a trend and know that that's the beginning of a trend, and exit a trade right exactly at the end of a trend, and you know that that's the end of a trend, you know to not exit until that happens, you are going to be so excited that it's really going to have a major impact on your life. Now, someone wrote to me last week and had some insights and breakthroughs based on what I was showing in a previous video, and then this person looked at some charts and was not able to really determine the beginning of a trend and the end of a trend. And of course, there is a little bit more detail that you need to know. Just a little bit of fine-tuning and adjustment to what you're seeing on your charts, and you can also do that, and you can do it across all time frames, long and short, on the 5-minute, on the 1 hour, or whatever time frame you choose to look at and trade based on. And because you are able to see that, you're also going to be able to see what time frame is the current trading opportunity happening on. Because you're not just going to go to any time frame arbitrarily, but you're going to go to the time frame where the current opportunity is happening, and you're going to adjust your charts so that you can see that entry and that exit. And then when the trade is shifting to a different time frame, you're going to shift right with it exactly at the right time. You're going to go from one time frame to another time frame and then focus on that time frame where that opportunity is now happening. So this week, as you're looking at your charts, just take a look and see if you understand what I'm talking about, and if you have any questions about that, if it's not quite crystal clear exactly how to do it, just let me know, or take some time to study the course that I put together that shows exactly how to do this. I look forward to hearing more about the results that you're getting and how it's changing your life for you.